Most people see the stock market as a casino, a place of luck, flashing red and green lights, and overnight riches. But to one man, it was never a game of chance. It was a game of patience, discipline, and a deep understanding of human psychology. Welcome to Apex Finance. Today we are diving deep into the mind of the greatest investor of all time, Warren Buffett. This isn't just a biography. It is a 90-year masterclass on how to think about money, risk, and life. To understand the billionaire, we must first understand the boy. Long before he was the Oracle of Omaha, Warren was a child of the Great Depression. He saw his father lose his job, and he saw a world gripped by financial fear. This left a permanent mark on his psychology. While other kids were playing games, 10-year-old Warren was at the Omaha Public Library, reading every book with finance in the title. By the age of 11, he bought his first stock, City Service Preferred. He bought it at $38, saw it drop to $27, and then sold it as soon as it hit $40 for a tiny profit. Days later, that same stock skyrocketed to $200. This was his first great psychological lesson. The market is a device for transferring money from the impatient to the patient. Warren didn't just want to make money. He wanted to understand the mechanics of wealth. He delivered newspapers, sold chewing gum door to door, and even installed pinball machines in barbershops. By the time he finished college, he had saved the equivalent of $100,000 in today's money. But the real turning point wasn't a trade. It was a teacher. Benjamin Graham, the father of value investing. Graham taught Warren the most important rule in finance. Price is what you pay. Value is what you get. In this first chapter of our deep dive, we explore why Buffett ignores the noise of Wall Street. He doesn't look at stock charts. He looks at businesses. He doesn't look at price movements. He looks at competitive advantages, what he calls the economic moat. Stay with us, because over the next 30 minutes, we are going to deconstruct the specific rules Buffett used to turn a dying textile mill called Berkshire Hathaway into a $500 billion empire. To master the market, Buffett didn't look at graphs or moving averages. He looked at the soul of a business. This brings us to the second pillar of his psychology, value investing. Most investors suffer from FOMO, the fear of missing out. They buy when the price is high because everyone else is buying. Buffett does the exact opposite. He follows a simple mantra: be fearful when others are greedy, and greedy when others are fearful. But how do you know when to be greedy? It starts with understanding the margin of safety. Imagine you are building a bridge that needs to hold 10,000 pounds. You don't build it to hold exactly 10,000 pounds. You build it to hold 30,000. That extra 20,000 is your margin of safety. In investing, if a company is worth $100, Buffett only wants to buy it if he can get it for $70. This gap protects him if he is wrong. Then comes the concept of the economic moat. Think of a business as a castle. In the medieval ages, a castle was only as good as the water-filled moat surrounding it. A wide moat protected the castle from enemies. For Buffett, a moat is a brand, a patent, or a low-cost advantage that competitors cannot easily copy. This is why he loves Coca-Cola. It doesn't matter how much money you have. You cannot simply delete the brand power of Coke from the minds of billions. Buffett's psychology is built on the refusal to diversify for the sake of diversifying. Wall Street tells you to own 50 different stocks to be safe. Buffett calls this Noah's Ark investing. You end up with a zoo. He believes in focus investing. If you find a great business at a great price, why put money into your 20th best idea? Put it into your top 3. But there is a catch. This strategy requires a level of emotional control that 99% of people do not possess. It requires you to watch the market crash by 50% and not panic. In fact, it requires you to smile when it crashes, because now your favorite castles are on sale. In the next part, we will explore the most powerful force in the universe, something Einstein called the eighth wonder of the world, and how Buffett used it to turn millions into billions without working a single extra hour. If you look at Warren Buffett's wealth, you will notice something shocking. Over 90% of his net worth was created after his 65th birthday. This is the part of financial psychology that most people fail to grasp. We think linearly, but wealth grows exponentially. Albert Einstein famously called compound interest the eighth wonder of the world. Buffett understood it at the age of 10. Imagine a snowball at the top of a long hill. In the beginning, it grows slowly, but as it rolls, it becomes a massive, unstoppable force. This is how Buffett's portfolio works. He didn't build his empire by making one lucky trade. He built it by staying in the game for 7 decades. The secret to compounding isn't just a high rate of return, it is time. Buffett often says that his wealth comes from a combination of living in America, lucky genes, and compound interest. But the real ingredient is his temperament. He has the discipline to let his money work without touching it. Every time you pull your money out of a good investment because of fear or greed, you reset the clock. You kill the snowball. As we conclude this deep dive into the mind of the Oracle of Omaha, remember his most famous advice. Investment is simple, but not easy. It is simple because the rules are clear. Buy quality, wait forever, and ignore the noise. It is not easy because it requires you to master your own emotions. Wealth isn't just about having a high net worth. It's about having the freedom to live life on your own terms. Warren Buffett still lives in the same house he bought in 1958 and eats a simple breakfast every day. He proves that the ultimate goal of finance is not to buy more things, but to buy more time. Thank you for watching this masterclass on Apex Finance. If you found value in these billionaire lessons, hit the subscribe button and join our journey toward financial freedom. Remember, the best time to start was yesterday. The second best time is today. Build your mindset. Build your wealth. We will see you in the next one.